We are going to go deeply in this trade. It's Nasdaq 100, CFDs or whatever you wanna call it. It does not matter. But the thing is, we need to understand why exactly this trade went to our target. But first of all, we understand our protocol system that we are using in our trades. It is simple. We need to find an area of interest. It's like that, something like that. Its area of interest here, from this leg to this leg. It could be like some kind of fair value gap or some kind of order block or whatever you want to call it. It does not matter. We want market to come to touch around of it and then come higher, but we don't take that high. We should not take that. Just create some kind of recent low inducement and then come back to take it, and then yeah, come back to the range. Yeah, this is our entry. And we are going to go deeply about entry protocol and yeah, inducement. So let's begin. The the thing is, what I'm looking at here right now is I saw this is a fair value gap. Okay, this is 4H fair value gap, which means my market structure shift, break of structure, whatever you wanna call it, does not matter for me. It should be happening for hour. Why? Because the inducement also should be happening for hour. I should not look like for 1 hour inducement or no. It should be at the same time frame that the like the point of interest is. If the point of interest is daily fair value gap, yeah, you should look at the daily time frame. It will take so much time. So here I'm looking at what fair value gap. The people that they don't understand the fair value gap is that gap between that candle high to the candle low, that little gap right there. And this is just like a very simple way to understand it. You don't need more than that. But as you see here, the market come. The rate is after they will see this touch, and then the market structure shift or break of structure. People these days they call everything that this is the market structure shift, break of structure. It does not matter actually. And then yeah, they start buying around of that, which means my inducement now is confirmed, which means that low. So after that being took, let me just grab something like that. Yeah, like that. This is our inducement. The second phase, the first phase is to identify inducement. The second phase is to wait for inducement to be liquidated, which means it's happening there. And that liquidation right there, you need to look for the market structure shift or break of structure, anything. Okay. In this example here, I will look for what? For this candle high. I need to candle to close above it. This is my scenario to enter. And I have the second scenario. Sometime if I have a fair value gap like this, I will wait for the market to disrespect it. Like it happened here. And then I will consider it is market structure shift, break of structure shift. Does not matter actually. But it's all, we cannot say it's all the same, but yeah, it does not matter for me basically. For me, I'm just like looking for, if I have like this fair value gap, I will wait for that candle high to close above it. But if I don't have that fair value gap right there, I will just wait for that to close above it. If I have fair value gap, I need to disrespect that, which means that wick we disrespect it, and then I will enter the next for each up like this one. I will enter. I will not chase that one. Maybe it will went above that. No, I will not chase it. And then I will enter. As you see here, we have two significant time frame. We have the manipulation is happening in very key time frame between 3 to 4 London time. This is good time. It's like a silver bullet time or whatever. Mm, I don't care about that too, but just like the opening of London, it's a very liquidated time. And the second time also is around of New York time opening between 10 and 11. So this is the the thing that you need to pay attention. Let's do a quick recap about that. Now, what we have here is, let me draw that. What we have is we need to look for a leg that creates some kind of fair value gaps. And then the next step is we will wait for the market to come right there, tapping into that 50%, upper half, it does not matter. And then doing some kind of like that. It could be near from that, but we should not take that high because so many people are already start buying around of that fair value gap. If already take that high, they will be in break even, so we don't need them anymore. So they are not in the marketplace. But if the market didn't take that high, which means what? This low is very liquidated. The market most of the time is doing to go some kind of accumulation and then what? Gathering more stops around of that, and then when the right time comes, they will do some kind of manipulation. So this is your manipulation leg. When this manipulation actually happen, you need to wait for the market structure, shift, break of structure. If you have a fair value gap there, you need to wait for the market to disrespect it. If you have like a manipulation without a fair value gap, basically you need to look at the same time frame that this fair value gap formed. If it's in 4 hour, look at the details in 4 hour. Don't just like change the time frames. No, you need to look at the same time frame. And yeah, if let's go back to the point. If you have a leg that have fair value gap, you need to wait for the market to disrespect it by leg, by wick, it does not matter, and then you can end. But if there is no fair value gap, you can easily wait for that candle that caused the manipulation, the price to close above it. That candle that passed through that low. Most of the time it's very weak. Like this example here, I will wait for this one. That closing above it, I will start buying there when the opening that candle. So don't put the stop loss below that. You should put your stop loss below that. Approximately you can put it below the quarter below, does not matter. So yeah, this is the exact point that I'm talking about. In this example here, for example, this fair value gap there, when the market tap into it, it make another high, does not matter. This is not inducement. Okay, but this is inducement. Okay, that's why the market went so aggressively above when the market took that low. Yeah, this is a quick understanding about that. Like if you have any question, you can put it in the description. It's very suggestible, so I can read every comment and then I will answer you by video, or I answer you if it's a very simple question. Yeah, like make sure also you subscribe if you are new, or like the video, like yeah, everything you do, like it's good.